Hey you guys, how's it going? My name's Jeff. Welcome to the channel. Coming to you from hazy San Diego today. And I uncovered 7 ETFs that I think are kind of fantastic because what they've done is they've turned $10,000 into a phenomenal amount of money over the last 10 years. So wouldn't you want to know about which ETFs have done the best? I've looked real carefully at them. I've omitted the ones that looked really junky, like they invested in trash stocks, and I'm just going to share with you the ones that I think are intelligent, that would make wise investments for someone who's in it for the long run. Again, I'm not giving financial advice here. I'm just going to tell you about which ones I think make a lot of sense. I'm also going to tell you which ones of these I personally invest in. So let's get started. The number one top returning ETF is VGT. That's the Vanguard Information Technology ETF. And this ETF turned that $10,000 into $62,227. And that's a total return each year of 19.35%. Phenomenal. And what I'm going to say is, first off, I actually own shares of this. Every month this year, I've been buying a chunk of this on the first trading day of whatever month it is, January, February, March, April, May, and I'm going to continue doing it all year. And the other thing I wanted to share with you is the top 3 holdings, which are Apple, Microsoft, and Nvidia. So we can see right off the bat why an ETF like that has done really well over the last 10 years. So I looked at from 2013 until 2023. That's our 10-year period. Are you ready for number 2? Are you sitting down? Are you ready to find out what it is? Well, it's an ETF I don't think I've ever mentioned on this channel before, but I think it's a pretty wise option for this day and age, for investors who want to be part of not only the growth that's been going on over the last 10 years, but also the next, and that is QCLN. This is a clean energy ETF, okay? It turned those $10,000 into $51,761, and that is a average annual return of 17.25%. So that is just amazing. Again, you know, you never know whether the stocks that did real well the last 10 years are going to do the same the next 10, but it's good to know about this particular ETF. Top 3 holdings are ON Semiconductor, First Solar, and Tesla. So, you know, it makes sense, right? These are all kind of hot renewable energy technology stocks. So they've done real well. I'll bet you that Tesla had a lot to do with this fund doing well in the past 10 years. So be heads up about that. When you're thinking of buying an ETF, don't just go on the past returns, because if Tesla powered the last 10 years of returns for this ETF, and Tesla doesn't have phenomenal returns going forward, then this ETF might not be that hot. Always look at the top holdings if you're going to invest in an ETF. Now, the number 3 ETF in this little contest, this portfolio that I'm sharing, is VHT. And that is the Vanguard Healthcare ETF. And that turned $10,000 into $39,366 for an annual return of 14.18%, which is amazing. And the top 3 holdings, this is a healthcare ETF, were United Health, Johnson & Johnson, and Eli Lilly. Now, keep in mind, with this ETF, this is, I would say, a far more conservative ETF because it's investing in companies in the healthcare sector which have generally been around for a long time. They have very long track records, and they're all profitable companies. So you're not taking the same risk you are investing in, say, a tech or a clean energy ETF, where a lot of these are newer companies with just like red hot results. So VHT, I think, makes a lot of sense. Again, not advice for you guys, but I'm just saying, personally, I invest in this ETF, and I think it makes sense if you don't want to have crazy ups and downs every year, but you just want to know you're investing in durable, well-established, profitable companies. So that is VHT. Now, the number 4 is this ETF you've heard about before on this channel because I invest in this one as well, and it's VTI, and it's just an amazingly well diversified, probably the best diversified ETF in the United States. It invests in companies of all sizes, so you've got large caps, mid caps, small caps. It's definitely weighted. It has more money in each share, goes towards the largest companies, but that return of $33,862 that $10,000 turned into is a 12.53% every year. That's an annualized return. Top 3 holdings: Apple, Microsoft, Amazon. So that right there, you're investing in 3 of the best, strongest, most just profitable, innovative companies in the world, and you're getting thousands of other stocks in that portfolio. And I think that's why VTI, for people who just don't want to spend a lot of time trying to figure out which ETF, VTI makes so much sense, because as you can see, the returns are amazing and it's really well diversified. You get to have your cake and eat it too. So let's now look at the number 5 ETF in this portfolio, and that is VTV. That is the Vanguard Value ETF. I personally love this one, and I invest in it because the number 1 holding is one of my favorite companies in the whole world, and that's Berkshire Hathaway. Also invest in ExxonMobil and United Health Group. So VTV turned the $10,000 into $31,034, and that's an annualized return of 11.58%. Anything over 10% is a really strong return, and this ETF is no exception. I just think it's an amazing one, and that's one of the reasons I invest in it. Number 6 ETF is VB, the Vanguard Small Cap ETF. I invest in this, and I like that it turned $10,000 into $26,855, and that is a annualized return of 10.03%. So this ETF is a really good ETF if a lot of your holdings are in large cap stocks and you don't really own any small caps. So what you can do is get exposure to this whole class of stocks that have historically been shown, for investors who are in it for the long run, you get a better return over beyond 10 years, beyond 20 years. Small caps as an asset class have returned really well, even compared to large caps. So top 3 holdings of this ETF are Fair Isaac, Targa Resources, and Atmos Energy. Now, obviously these are small companies, and it's likely you've never heard of them. I hadn't heard of them. So for the number 7 ETF in this portfolio, it's AVUV, which is the Avantis US Small Cap Value ETF. And just want to put an asterisk next to this one, because this ETF has not been around for 10 years. Its inception date was September 24th, 2019, so it's a relatively new ETF. It doesn't have the 10-year history, but I wanted to mention it to you because I think the approach of the managers of this fund are at least worth knowing about kind of what they're doing. So whereas the other ETFs are following indexes and they're just passively run ETFs, this actually has a management team of actually people who decide which stocks make it into the AVUV portfolio. And one of the criteria for making it in is the companies have to be profitable. So these are small cap value stocks, means they're cheaper or attractively priced, and they have to be profitable. And what that does is, a lot of the worst performing stocks in any small cap ETF are the kind of ones that go full throttle and try to make it really big, but then they crash and burn. They go out of business. So they drag down the returns of these ETFs, cause you to get less money in the end of the year. So when you just take these poor performing, unprofitable stocks out and you only invest in the profitable ones, you give yourself a chance at maybe having better returns. It's no guarantee these guys are going to succeed in their goal of outperforming the indexes, but anyways, I wanted you to know about this ETF. The returns over the time since September 24th, 2019 are 44.37%. It's a really great return. If they were around a lot longer, I would expect that this return's going to decrease, because nobody gets 44% returns every year forever. But even if they did half that over the next decade, it would be phenomenal. It would be just incredible. And also, just for a more, I think, fair comparison, let's just look at AVUV and compare it to two other ETFs, but since 2020, since this ETF was inception date was in 2019. Let's look at it from 2020 until the present. And AVUV turned $10,000 into $14,146, which is a 10.97% return. And that is actually a very favorable return during the same time period if you compare it to VB, which is the Vanguard small cap ETF. That turned $10,000 into $11,844. So as you can see there, the AVUV returned more than $2,000 more in that time frame. So the VB had a return of 5.21. And then VTI, which is just the Vanguard Total Stock Market ETF, $13,262. That's what it turned the $10,000 into, and it returned 8.84%. So AVUV almost earned $1,000 extra beyond the Total Stock Market ETF. And so, I think sometimes it's worth it. Again, not advice for anybody, but sometimes it's worth it picking an ETF that maybe shows promise at having returns that outperform the overall stock market average. And if you're right, then you get to perhaps earn a better return. And this ETF owns the stocks, so even if a few of them don't do so well, it's not going to hurt your overall total returns that much. And that's one of the benefits of a very well diversified ETF. Just as VTI is exceptionally well diversified, I find that AVUV, even though it focuses on small caps, still has a very diversified portfolio. So I hope you like this video. If you have, give it the thumbs up. YouTube will, let other people know about these videos. And if you're not yet a subscriber, I make videos to help regular people like you who are trying to make smart investment decisions, kind of know about what's available out there, how things have done, and just my thoughts and ideas about sensible, common sense, smart ways to go about investing. So if that's something you want to learn more about, if you want to become a better investor, if you haven't started yet, or maybe you're just putting together an investment portfolio and you want some ideas, well, I share those things with you guys all the time. So subscribe to the channel, and then you'll get a heads up whenever I make a new video. So thanks so much for watching, and I will see you in the next video.